More and more people are looking at Bitcoin and expecting a major move to be coming in the near future as sellers are quote unquote being exhausted. I am not a financial advisor. This is not financial advice. Everything I'm sharing is my own opinion. It's my own research. I highly encourage you to go do your own research, and I'll have a link to this article down in the description below. This is titled Sharp Bitcoin Price Move Expected as Volatility Hangs at Record Lows and Sellers Are Exhausted. Bitcoin price has been range bound for 126 days, but analysts say an explosive move is imminent. Bitcoin's lack of volatility has been the dominant discussion point among traders for the past 2 weeks, and the current sideways trading within the $18,000 to $25,000 range has been in effect for 126 days. A majority of traders agree that a significant price move is imminent, but exactly what are they basing this thesis on? Let's take a look at 3 data points that predict a spike in Bitcoin volatility. Muted volatility and seller exhaustion. According to Glassnode research, the Bitcoin market is primed for volatility, with on and off-chain data flashing multiple signals. The researchers note that 1 week realized volatility has fallen to 28%, a level that is typically followed by a sharp price move. Exploration of Bitcoin's ASOPR, a metric which measures an average realized profit loss multiple for spent coins on any given day, shows a large divergence is currently forming between price action and the ASOPR metric. As price trades sideways or decline, the magnitude of losses that being locked in are diminishing, indicating an exhaustion of sellers within the current price range. In addition to the divergence between price and the adjusted SOPR, short-term Bitcoin holders are approaching their break-even level as the short-term holder SOPR approaches 1.0. This is significant because a reading of 1.0 during a bear market has historically functioned as a level of resistance, and there is a tendency for traders to exit their positions near break-even. If the ASOPR were to crest above 1.0 and turn the level to support, it could be an early sign of a fledgling trend change with the market. Trading indicators are also at pivot points. Multiple technical analysis indicators are also flashing a signal that a strong directional move is in the cards, a point noted by independent market analyst Big Smokey. According to Big Smokey, Bitcoin price range, Super Guppy, and Bollinger Bands are getting real tight. Ethereum looks the same. You know what that means. Crypto research firm Delphi Digital recently issued a similar perspective, citing compression within the Guppy multiple moving average as a sign of, quote, shorter-term momentum and the potential for a rally as this cohort attempts to flip the longer-term moving averages. On October 10th, Delphi Digital researchers referenced the Bollinger Band Width Percentile, or BBWP, metric and suggested the possibility of, quote, a big move brewing for Bitcoin. The researchers explained that, quote, historically, BBWP readings above 90 or below 5 have marked major swing points. The state of Bitcoin derivatives. Crypto derivatives markets are also flashing multiple signals. Bitcoin futures open interest has reached an all-time high, 633,000 contracts, while trading volumes have plummeted to a multi-year low of $24 billion daily. Glassnode notes that these levels were, quote, last seen in December 2020, before the bull cycle had broken through the 2017 cycle 20,000 all-time high. As one would expect during a bear cycle, liquidity, or the amount of money flowing in and out of the market, has declined, reinforcing the reason for believing that an eventual spike in volatility could result in a sharp price move. While derivatives metrics like futures open interest, long liquidations, and coin margin futures open interest are breaking multi-year records, it's important to note that neither provide absolute certainty on market directionality. It's difficult to determine whether a majority of market participants are positioned long or short, and most analysts will suggest that the surge in open interest is reflective of hedging strategies that are in play. One thing that is certain is that on-chain data, derivatives data, and basic technical analysis indicators all point toward an impending explosive move in Bitcoin price. While Bitcoin's current prolonged period of low volatility is somewhat unusual, Reviewing the data presented by Glassnode and Delphi Digital provides valuable insight on what to expect when certain on-chain metrics hit specific thresholds, and this should provide investors with some ideas on how to position. So as I've noted in my other videos before, some other key things to really take into account moving forward with this, guys, is going to be the fact that there's the midterm elections that is less than 1 month away. Waiting to see how things continue to play out with that of itself. So I don't know if necessarily we're going to continue moving sideways all the way up till that. At this point, nothing surprises me. I think people are definitely exhausted at this point, and at some point you want to start making money again. So if we start to see a rally, the people that sold off, they sold off. Now people want to get in because they don't want to miss the boat, because it's like, oh, is this it? Is the market actually finally starting to recover? When is that going to happen? Is it going to be today? Is it going to be tomorrow? Or is it going to be a couple weeks from now? Or are we going to have to wait till next year or a year from now? Because we're hearing other things too, right? We're hearing other things that, oh, we're going to be entering into a recession. Some people are saying we're already in a recession. And then you got people saying, oh, we're going to be entering into a depression. You're hearing things like 6 months to 12 months from now, oh, the market's not even going to recover till then. And then you got the war in Ukraine. Like, there's all these Debbie Downer type moments that are going on. And the justification behind them and the contributions to them on how they would affect the price, it is justified, right? Like, you got to understand that these are significant levels of impact that could take place if they were to actually happen. But the severity of, the realistic expectations of whether or not they're going to happen, that's the rough part. Sure, they could, but doesn't mean it will happen. We got to wait and see how things play out. I'm hoping, personally, the market starts to make a run soon. I'm tired of this downtrend. I'm tired of this bear market, as they're saying right here. It's been hanging out between $18,000 and $25,000 for 126 days. I don't know if you guys are like me. Whenever we pass above 100 days on something, I go back to the mentality of when I was a kid. When I was a kid, in elementary school, right, we're going way back, we would celebrate the 100th day of school. We would march through, and it would be like a whole event thing, like, it's the 100th day of school. Da, da, da. I don't know if you guys did that in your schools or not. Maybe it's just me. I think I've heard other people have done that in their schools. But it's like, you kind of have that realization of like, wow, we've been in school for so long this year that we just passed 100 days in school. Wow. And then here we are with Bitcoin. It's like, it's the 126th day of a bear market. It's the 120. You're like, no, come on. It's a long time. Let's move forward. Let us know what you guys think about this down in the comments below. Again, I am not a financial advisor. This is not financial advice. Thank you so much to my Patreon supporters. A double shout out thank you to WeLoveSafeMoon.com, Murad Shaker, Victor Vegas, SafeMoon Oz for being higher level patrons. Also, thank you to my YouTube members for your support. If you guys are new to the channel, don't forget to hit subscribe, hit the thumbs up, like button. God bless, and we will see you in the next episode.